Good afternoon, this is Rich Nelson with Allendale, covering the wrap-up comments here for Wednesday. This is September 29th, 2010. A lot of action day on the outside markets. We can speak crude oil up about $1.66, trying to reach a higher end of the recent trading range. Over on the U.S. dollar, down 28 points here today. Interesting fact about that U.S. dollar, this is the lowest trade we've been at since February 3rd of earlier this year. So quite a big move here we've taken down in recent months. Over on the grains, interesting trade here today. Corn up 5 1/4 cents. It was made a very important move here today. In fact, we broke down below the $5 psychological point, got down as low as 4.86, and actually not just even closed at that psychological point, but even closed up there for the 5.05 range. So quite a big day for corn in terms of technically making themselves look much stronger than they have been in the past couple of days. Over on the soybeans, we cannot say they held that strength very well. Down 12 cents for the day. That did come back about halfway by the close from the lows this morning, but at least for right now, it looks like the beans did close down. Wheat, kind of quiet day here. I have up 1/4 cent for the last trade. As far as main reasons why we had this stronger corn and lower bean trade here today, key issue is, of course, is yields. We're still looking at questions regarding this corn yield issue. One recent Newswire poll dropped the yield from what they had last week, 160, I believe it's 160.6, down to 160.4, I believe. In fact, our most recent run of our own crop condition model broke that 160 barrier, actually put it at 159.7. So keep in mind, this trade is finally getting confirmation from more solid sources that this market could see a 160 corn yield. Quite a big deal in this one compared to the 162.5 USDA posted in September. As far as the soybean yields, nobody's going to argue with those at all. Those are fantastic numbers, almost across the whole nation. So in terms of the soybean issue, that's why we didn't see the strength in soybeans today. The fact is, we just don't know where to put this bean number. Should we actually raise it from the 44.7 USDA had back in September? And if so, where do you stop at? 45, 45 and a half? No matter what you do with bean yields, we're still going to have too much supply to start out with anyway. As far as key issues coming up here tomorrow morning, we have two separate reports. Number one is the quarterly grain stocks. Each and every quarter, USDA surveys farms and also commercial operations and finds out exactly how much of each class of grain there is left on farms. What's key about this one for corn as well as soybeans is this marks the end of the old crop marketing year. So for months and months, USDA has been guessing what the August 31st total of grain stocks would be. Now we finally get that number revised. In terms of the corn, they are talking a little higher revision, going from last month, September, the supply-demand report said 1.387 billion bushels. The average trade guess for this quarterly stocks report says 1.407. We're right next to that. Our number is 1.405. For soybeans, instead of a kind of a good revision, the average trade guess actually says not too much action going on overall. USDA last month in September on that supply-demand report estimated a 150. The average trade guess says a 151 for the quarterly grain stocks report here. So a small increase of 1. We are a little bit lower than that, though. We actually feel a smaller revision could be seen down to 145. Either way, the soybean number is not going to change anybody's mind here at all. As far as the wheat thing, we can point out we've got, as I said, two reports come out tomorrow morning. Aside from the grain stocks, we do have the small grains summary. This is where USDA goes back and revises crops that have already been harvested, the small grains, wheat, oats, barley, those type of issues here. In terms of numbers, the average trade guess says we're going to have a small revision higher in last year's wheat crop from 2.265 billion bushels to 2.267. So a small 2 million increase here. As far as the action on the livestock here today, straight down was this trade since the open almost. On the hog side, down $1.17 for the last trade on the October contract. Key issue there, we actually are seeing confirmation of a cash hog as well as cash pork market that's starting to fold up here. Typically, we see a high in these markets for some peaks in the summer. Peaks can happen generally July or so, also maybe early August. However, this market was staying strong here for way past that point. Key issue was we had all those sharp slaughter numbers down 6 or 7% each week. That's going to start changing now based on this hogs and pigs report that we just learned on Friday. So key issue there is we're finally seeing this long-term break in cash hog and cash pork prices, which should have happened weeks ago. It's finally happening right now. As far as this goes, we can point out we can probably expect another lower trade today on the wrap-up on the wholesale beef or wholesale meat report. We'll probably see another good one. I don't know if we'll see the same $2.78 break as yesterday, but it certainly will be a lower one here today. Another issue we can speak of, the WTO actually said that the U.S. ban on where we have this ban on Chinese chicken, they said, you know what, that's illegal. It's going against your own rules. So we actually have a ban in place on Chinese chicken due to health concerns, is what we put it. It's actually more of a protectionist measure. In the real picture, you know what, no matter what China sends us, it's going to be almost no chicken compared to what we send them. So our little ban on their chicken is simply, in my opinion, more or less not a big deal we need to focus on here. It's more of an issue actually giving China reason to have bans on our own chicken and some other issues here. So it's more of a trade dispute rather than a price type of dispute. Over on the cattle, we see down 72 cents for the October in the last trade. Key issue for cattle today was the fact that cash traded at 97. That was down $1 from last week's 98. So at this point, we're still waiting on wholesale beef, U.S. consumer demand to show up, those type of issues. And so far, we don't have solid numbers to speak of to say, you know what, we've got this wholesale market wrapped up because consumers are back in town. So far, that argument is not happening just yet. So overall, kind of a mixed to lower trade for livestock overall. And like I said, as far as things coming up tomorrow morning, 2 reports, quarterly grain stocks, as well as the small grain summary. Give Allendale a call here. Find out what those reports said, and more importantly, what they mean for you and your operation. Certainly for working on some grain hedges, whether for short side or from the long side for you guys who do buy grain, or also trading. What can this market do tomorrow? What kind of action will we see in terms of prices? If you have any questions about the reports or anything else, give us a call, 1-800-262-7538. My name is Rich Nelson. Have a good trading day and a good trading week.